Just hours ahead of the 1st August reciprocal tariff deadline, US President Donald Trump has issued updates on duties ranging from 10% to 41%. Goods that have been transshipped in a bid to avoid the tariffs will face another 40% levy, according to the White House. In the updated list, India continues to face a 25% levy on imported goods. The tariffs will come into effect in 7 days from the signing of this order. Stocks on Wall Street end Thursday's trading session lower. The S&P 500 posts its third straight day of losses as Meta and Microsoft failed to lift market sentiments despite strong results. The Dow fell over 330 points. Investors now await the all-important jobs data later this evening. Asian markets have also opened lower after President Trump signed an order to impose higher tariffs on dozens of economies. The GIFT Nifty is indicating yet another gap down start for our own markets. Crude oil prices have eased as uncertainty over Donald Trump's tariff threats loomed over investors. On the other hand, gold prices gain as traders turn to safe havens amid the tariff risk. And in key results, Coal India's first quarter beat subdued expectations despite lower volumes. Eicher Motors reports revenues which was above expectations. However, the net profit was slightly below what the street was anticipating. Keep an eye out for numbers from ITC today. The FMCG major is expected to report a dent in its margins due to higher tobacco inflation. We are earlier than usual, but the situation demands so. You're watching Power Breakfast right here on CNBC-TV18 this Friday morning in the Mumbai News Center. I'm Hormus Fatakia. Let's first start off with how the Asian markets are faring this morning, and they are presenting a mixed picture as of now. And there are region-specific issues, if I could call it that. The Hang Seng is absolutely flat, as is the Shanghai Composite. The Nikkei is down 0.4%, and the Taiwanese index is trading lower by 1%, and that is after a 20% tariff was imposed on Taiwan by the Trump administration earlier this morning. And the South Korean indices are down almost 3%, and that's nothing related to tariffs, but the government over there, news reports are suggesting, is mulling a higher tax on both corporates and investors from the stock markets, and that is what has spooked the street over there in South Korea, and as a result of which the Kospi, which has been an outperformer across the region all through of 2025, is now seeing cuts of well over 3%. But the big story of the morning, and just before we get to that, pull up the GIFT Nifty as well. That will give you an idea of how our own markets are likely to start off. And it's a gap down start is what the GIFT Nifty is suggesting, an implied open suggesting another 150-point downtick. We'll get to the markets in just a bit, but the big story of the morning, the day of the tariff deadline has arrived. It's the 1st of August today, and now US President Donald Trump has signed an executive order that modified the reciprocal tariffs on several countries with updated duties ranging from 10% to as high as 41%. The Trump administration has stuck to the 25% tariff on India, which is the highest in the South Asian region. However, the quote-unquote additional penalties which Trump had threatened to impose on India for doing business with Russia still remains unclear. The modifications will take effect with respect to goods entered for consumption or withdrawn from the warehouse for consumption on or after 12:01 a.m. Eastern Daylight Time, 7 days after the order has been signed, which means it will take effect next week. Now, White House Press Secretary Caroline Leavitt said that almost 200 countries have reached out to the trade and tariff teams, and added that countries which do not have a deal will hear from the administration by midnight. Take a listen.
So yes, tomorrow, August 1st, the reciprocal rates will be going into effect. If more deals are cut between now and midnight, I will never count out the president. You've seen him do it before. He cut 3 deals in one day very recently. So we'll see what happens. I do know foreign leaders are ringing his phone, realizing this deadline is a real thing for them tomorrow, and they're bringing offers to the table. Well, there's a lot of countries that I know have reached out. I believe it's upwards of 200 countries around the world have reached out to the trade and tariff team. Of course, as I said previously, and the president said, we're going to prioritize our key trading partners, which we have done. Like I said, of the 18, 2/3 of those we have cut these tailor-made deals with. But I do know that the trade team has been working around the clock to try to be in correspondence with as many countries as possible. But if they haven't heard from us yet, they will in the form of a letter or an executive order by midnight tonight.
Important updates there on from the White House, and Parikshit is now joining in with more details on this. He's been following all of these updates right from the month of April. Parikshit, what are the latest developments?
Well, White House, as expected, has announced the August 1 tariffs. The tariff for India has been fixed at 25%, as Donald Trump had announced earlier. This is the highest among countries in South Asia. So, for example, U.S. has imposed a 15% duty on Afghanistan, 19% duty on Pakistan, Cambodia, Thailand, Bangladesh, and Sri Lanka have been hit with a 20% tariff. As you said, the August 1 tariffs will be imposed 7 days from the signing of the executive order on 31st of July. Now, as per Executive Order 14257, that was signed by Donald Trump on the 2nd of April, items like pharma, semiconductor, lumber, critical minerals, energy and energy products, they will continue to be exempted from reciprocal tariffs. So that still holds. Secondly, there are sectoral tariffs on autos, 25%, steel and aluminum, 50%. These sectoral tariffs will continue and they will exempt it from the immediate reciprocal tariffs that have been announced now. No change. As far as the additional penalty for India goes, clearly that threat is looming large. That could come in the next few days, possibly subject to where the negotiations take us. But at least in the August 1 executive order that has been announced by the Trump White House, there is no mention of an additional penalty for India yet. Interestingly, a very important soundbite coming from Marco Rubio, the U.S. Secretary of State. He has said that India's purchase of Russian oil is definitely a major irritant in negotiations, in trade negotiations, because it is funding the Russian war effort against Ukraine. Let's also tell our viewers that as far as the transshipment tax goes, the United States notification has said that any country found guilty of tax evasion, duty evasion, by trying to transship goods and show them as coming from a certain country, but they may actually be originating from China or for that matter, those articles will be slapped with a penalty, an additional penalty of 40% plus any fines that may be applicable.
So, Parikshit, there are a lot of unanswered questions still. The major question yesterday was the fact that whether these exemptions that were announced in April, they still stand. Is that correct? Do they still stand as per the latest order from the White House? And if you have managed to speak to certain sources with regards to the response from the government, what are you hearing on that front?
Well, no response from the Indian government as yet to the immediate notification, but the Indian government has been saying that we will take actions in our national interest. Sources have been saying that we are not going to take any kind of knee-jerk reaction. We're going to wait and watch the situation. 25% tariff, that somehow was an expected rise, but it is the additional penalty. It is the kind of words that Donald Trump has used against India which have come as a surprise. Sources in the Indian government are also preparing for maybe an additional set of secondary tariffs that may be imposed on India in case the Russia-Ukraine talks were to fail. Remember, Donald Trump has set a 10-day deadline for Russia to show progress in stopping the war with Ukraine. Now, if that weren't to happen, U.S. May slap severe tariffs on Russia and maybe secondary tariffs on countries like China and India, which buy oil, large amounts of oil and defense equipment from Russia. Currently, as far as the tariff situation on China goes, there is no change in the tariff situation, but that, of course, is subject to further negotiations. Items like pharmaceuticals, semiconductors, lumber, critical minerals, energy products, they will continue to remain exempted from tariffs. So if pharma was being exported to U.S. at zero tariffs, semiconductors were going at zero tariffs, so those duties will continue for now without any change.
Parikshit, thank you for those updates there, important ones coming in from the White House, and of course the response from the government as well, that there will not be any knee-jerk reaction, but whatever measures are taken will be done in national interest. Now remember, US President Donald Trump had ramped up the rhetoric hours after hitting India with a 25% tariff, plus penalties for buying Russian oil. Now, separately, Treasury Secretary Scott Bessent spoke to CNBC last evening, and he mentioned that India has not been a great global actor and the trade team is frustrated with the negotiations. Meanwhile, Commerce Minister Piyush Goyal told the Lok Sabha that India will take all steps to protect its interests. Listen to both of them.
Prime Minister Modi is a friend of mine, but they don't do very much business in terms of business with us. They sell a lot to us, but we don't buy from them. You know why? Because the tariff is so high. They have one of the highest tariffs in the world. Now they're willing to cut it very substantially, but we'll see what happens. We're talking to India now. We'll see what happens.
हम अपने राष्ट्रीय हितों को सुरक्षित करने और आगे बढ़ाने के लिए सभी आवश्यक कदम उठाएंगे। मात्र एक दशक से भी कम समय में
India came to the table early. They've been slow rolling things. So I think that the president, the whole trade team's a bit frustrated with them. And also, you know, India's been a large buyer of sanctioned Russian oil that they then resell as refined products. So, you know, they have not been a great global actor.
Views from both sides from last evening. Moving on to the pharma space now, that has been another bone of contention ever since Donald Trump said that pharma tariffs will be seen at never seen before levels, but the tariff rate is yet to be announced on this sector. Now, the White House press secretary Caroline Leavitt also mentioned to the reporters that the president has written letters to pharma companies, almost 17 of them, to provide most favored pricing for the American consumers. Listen to what she had to say.
The president signed an executive order earlier this year to solve the problem of exorbitant pharmaceutical pricing. According to recent data, the prices that Americans have been paying for brand name drugs are more than 3 times the price other similarly developed nations pay. The president is determined to solve this problem and took further action today. He has signed 17 letters to pharmaceutical companies' CEOs. Moving forward, the only thing I will accept from drug manufacturers is a commitment that provides American families immediate relief from the vastly inflated drug prices and an end to the free ride of American innovation by European and other developed nations.
Important developments there with regards to the pharma space as well, which has remained in focus all through because of these tariff uncertainties, and with the president now pressuring pharma companies for favorable pricing. Does this move have an impact on the Indian pharma sector? We have Ekta, who is here to tell us whether there will be any impact or not. Ekta, tell us more on this.
Hi, morning. Well, yes, important news which has come in where President Trump has sent letters to 17 pharma companies. He sent it to these innovator companies such as Eli Lilly, AstraZeneca, Novo Nordisk, Pfizer. And the focus of the letter is clearly on branded generics. So that has always been the case. And hence the Indian generic companies are really spared when it comes to this. Now, the letter demands that pharma companies charge the US customers what they pay in other countries for their branded drugs. So if you are paying for an innovator drug in Europe, you should be paying the same price in the US. Now, President Trump insists that companies immediately lower what they charge Medicaid for existing drugs. He also asks for a guarantee that future medicines remain at prices on par with the cost overseas, and the letter gives 60 days to voluntarily comply. Now, what this means is that basically innovator companies have resisted this globally linked drug prices as it basically stems innovation in the US. And that's because you have to fund your R&D from somewhere, and that R&D is funded from these costs which they pass on to the customers. The companies have urged the administration, in fact, to look at reducing costs via the supply chain. This for Indian generic companies is currently no impact, considering that they sell the generic version of these innovator drugs eventually when they go off patent, and those prices are any which way very low in the US markets. So unless you have an innovator drug portfolio, you're not going to be impacted, and majority of the sales that the Indian companies do, such as Dr. Reddy's, Sun Pharma, etc., are all in the generic space. So as of now, there's no real impact on Indian generics. In fact, they remain unscathed when it comes to this.
Ekta, thank you for that update. An important takeaway there, the generic players to have a limited or no impact whatsoever, and only those with an innovator portfolio may see some impact. That was the update from the pharma space. Meanwhile, President Donald Trump, in a separate statement, said that appointing Jerome Powell as chairman of the Federal Reserve was a mistake. And he also lashed out at Russia for its continued attacks on Ukraine. Here's what he had to say.
Oh, he is. We call him Too Late. He's too late. It's his new nickname. It's Too Late Powell. He's a terrible Federal Reserve chairman. Not only that, he's building a building. He's at $2.9 billion. It's actually 3.1 if you include other areas that are essentially the same thing. Way over budget, has no idea what he's doing. And I would say he's probably good at that compared to what he does with interest rates. But you know, we have him there, and it was a mistake. I put him in, and then Biden extended him. And Biden only extended him because he knew I couldn't stand him. And that turned out to be not a good thing for Biden. Although he did lower interest rates just prior to the election. Didn't work out too well for them. But he did lower them pretty substantially just prior to the election. No, he's a political hack. Not very good. He's not a smart guy. Russia, I think it's disgusting what they're doing. I think it's disgusting. This is Biden's war. It's not my war. But I said if I get in, I'll try and get the thing stopped. But I think what Russia's doing is very sad. A lot of Russians are dying. You have a lot of Russians. More Russians are dying. But Russians are dying. Ukrainians are dying. You know, the United States isn't really involved in that war. It shouldn't be. And by the way, I made a deal with NATO where NATO pays us for everything that we send. We send them. Yeah, we have about 8,000. Yeah, we're going to put sanctions. I don't know that sanctions bother him. You know, they know about sanctions. I know better than anybody about sanctions and tariffs and everything else. I don't know if that has any effect, but we're going to do it. Europe is extremely upset. But this is a war that should have never happened. This is a war that wouldn't have happened if I were president. And this is Biden's war. This was a stupid war to get into. Should have never gotten into this war.
Now, we also spoke to economist Neelkanth Mishra and Kotak Mahindra AMC's Nilesh Shah to get a perspective on the likely impact of tariffs on the Indian economy and the Indian markets as well. Listening to what they had to say.
We're talking about an increase of about $6 billion a year on last year's export numbers. And clearly now, I think, as you said, the second order impact on what happens to electronics exports, what happens to apparel exports, there was a lot of expectation that we may have an advantage. At these prices or these rates, we may have a 5% disadvantage. Some of this, if these indeed stick, see, I think the message here is that even South Korea was threatened at 25%, but they ended up at 15%. So maybe this is the preliminary, the pre-final step to the final tariff. 15% would be pretty much the floor. 25% now seems to be the ceiling. We will see the penalty thing, which I think is more sophisticated geopolitics, but that would be the range in which we end up settling. And I don't think it's very substantial. I don't think this is very important from a macro perspective. What I think the markets need to get used to is what they say in diplomatic speak, an absence of binaries. That most relationships, I think, in the next decade, 2 decades, are likely to be quite complex. The thawing of relationships between India and China, for example, is also a very meaningful development that has happened.
We are in a perfect storm right now. Valuations are on the higher side. Earnings growth is in mid-single digit to high single digit this quarter. And on top of it, from being somewhere favorably placed on tariff, we are now probably placed on the slightly unfavorable side. Domestic investors will have to be long-term investors, and they'll have to moderate return expectation. There will be always U-turn in US policy making as longer-term strategic interests of India and US are aligned.
Nilesh Shah and Neelkanth Mishra there on the likely impact of these tariffs. Take a short break, and on the other side, we will tell you how will all of this overnight and this morning's developments impact our own markets. Power Prep on the other side. Stay tuned. Welcome back. Time to set you up for today's trading action, and our research team is here with all of the things that you need to know. Now, the important thing to know is the fact that the GIFT Nifty is currently indicating a gap down start to the August series, and currently the implied open is suggesting a 140 point downtick, which means we'll open somewhere close to that 24,650, 24,670 mark. It'll be important to see how the benchmark indices start off. Now, of course, you're set to open lower, but we'll be opening close to very important support levels. Now, remember, yesterday's low of 24,609 was the fact that yesterday's low actually was of 24,639. We was lower than the day before's low, but the fact that we have not managed to break this week's low, which is 24,598, and that continues to be an important line of defense for the bulls, and we reversed from those levels yesterday as well, although we ended lower, but it was a substantial recovery from the lows of the day. Now, the other important thing to note is the fact that we are beginning a new series today, so there are stocks that will go out of the F&O space, there will be stocks that will enter the F&O space, and historically the Nifty has gained in 3 out of the last 4 August series. So the history is certainly kind to the index this time around. And of course, when we get more onto the F&O data, Sudarshan will tell you more as to why the August series has been kind to the Nifty. But as of now, as things stand, the Nifty is set for its 5th consecutive weekly loss. It's been declining for the last 4 weeks, and in case it wants to snap that streak, it will have to close above the mark of 24,837. Now, that becomes an important level on the upside, because that 24,850, 24,950 zone is where the Nifty has managed to find continued resistance all through this week and has not managed to sustain above those levels. So 24,837 is an important level to watch on the upside. As of now, the index is down around 0.3%, and you can see the weekly losses that we have had. They may look smaller in percentage terms. Of course, the quantum is a lot larger in terms of points, because from last week's high of around 25,250 odd, we have corrected almost 450, 500 points from those levels on the index. The Nifty Bank, of course, that is one segment that is insulated from any form of tariff related drama, and you can see the fact that it recovered from the lows, and that was the primary reason why the Nifty recovered from the lows of the day in yesterday's trade as well. But it could not sustain on the highs, and there's some selling pressure towards the final half of the trading session as well. But it closed below the mark of 56,000, the Nifty Bank. That is an important level to watch. It had not done so until the 19th of June, and it was the first time after the 19th of June that the index has closed below that mark. So that is an important level to watch for the Nifty Bank as well, and this is despite resilience shown by both HDFC Bank and ICICI Bank, the 2 biggest constituents of the Nifty Bank. Today, of course, tariff related developments continue to hog the limelight. Earnings reactions will be a plenty. We'll see reactions from Coal India, we'll see reactions from Swiggy and a lot of other names. ITC reports results today, so it's yet another day that will be linked to results. And of course, the all important US jobs data that comes in later this evening will be a key factor to watch out for. But for now, the GIFT Nifty is indicating a gap down start for our own markets, but the bulls would definitely be hopeful that the kind of resilience that was shown in yesterday's trading session spills over to today's session as well. Over to Rhea, who would list out the stocks that you need to keep an eye out for today. It's a long list that she has. Rhea, good morning.
Well, yes, good morning. Let's take a look at the stocks that are going to be in focus today. A lot of earnings to watch out for. First up is Coal India. The revenue has come in at rupees 35,842 crores versus our estimates of just about 34,990 crores. Margins have also been above estimates at 34.9% versus estimates of just about 31%. For Eicher Motors, the net profit has come in at rupees 1,205 crores, largely in line with estimates. Revenue has come in at rupees 5,041 crores versus our poll of 5,017 crores. For Mankind Pharma, the net profit has gone down by around 18% on a year-on-year basis, although the revenue has seen an increase of around 24.5% compared to Q1 of last year. For PB Fintech, the net profit and the revenue have both seen increases of around 40% and 33.5% respectively on a year-on-year basis. For Swiggy, the net loss this time around has widened to about rupees 1,197 crores versus a loss of just about 611 111 crores in Q1 of last year. The revenue, although, has gone up by 54% on a year-on-year basis. For Thermax, the revenue has come in at rupees 2,150 crores below our estimates, and the margin has come in at 10.5% versus estimates of 8.2% for Q1 of FY26. For JSW Energy, net profit has seen an increase of over 42% on a year-on-year basis. Even the revenue has seen an increase of over 78% compared to the previous year. Shifting away from earnings, PNB Housing will also be in focus today. The MD and CEO of the company, Girish Kousgi, has resigned with effect from the 28th of October of this year. For Gujarat Gas, they've announced a collaboration with Wari Energy for sustainable energy solutions. And lastly, UPL will also be in focus today since Morgan Stanley Asia has bought about 15.8 lakh shares of the company for a total value of rupees 82.24 crores.
Interesting list there. Morgan Stanley continues to remain a buyer in UPL, also reporting results today. So we'll keep an eye out for that stock as well. And lastly, Sudarshan joins in with cues from the F&O space to set you up for what promises to be a pretty exciting August series. Sudarshan, good morning.
Good morning, Hormaz. So it's the beginning of August series, new series, and one phrase that comes to mind for market is we are down but not out. And that's what reflected in yesterday's market move. We saw big intraday recovery in the first half. At the end, we did lose some gains, but the close was not that bad, even though Nifty, even Nifty Bank and Sensex closing in the red. Now, following the overnight cues, it's not favorable, and that's the reason GIFT Nifty is indicating a start with a cut of more than 140 points. Now, coming to the flows, that cues are reflecting in the flows as well, both in the cash market as well as derivative market. You'll see FIs continue to be on the sell side. Yesterday in the cash market, FIs have sold more than rupees 5,580 crore, but it was fully offset by DIs on a regular basis. And yesterday also, DIs have bought more than rupees 6,300 crore. In the derivative market, in the index futures, FIs have sold more than rupees 1,200 crore, and they have reduced both long and short positions. And now long exposure for FIs are at 10%, which is at lowest level since April of 2023. So what does happen if FIs longs are at these levels around 10 to 9% or 10 to 15%? Just look at the history. In April 2023, FIs long exposure was 9%. So over the next 4 series, Nifty has seen an up move of more than 2,500 points. Next, November 2023, FIs long exposure was 11%. So in the next 2 series, Nifty has seen a move of almost 3,000 points. Next comes February of 2025, when FI long exposure was 11%, and in the next 5 series, Nifty has moved higher by almost 2,300 points. So how was July series? We snapped gaining streak after 4 series, and Nifty had fallen almost 800 points. But if you look at the history in the previous, what has happened in the August series, in 2021, Nifty had seen a big move of almost 5.4%. In August 2022, Nifty has seen an up move of 3.5%. In 2023, we did see a fall of 2%. In 2024, again, we were up almost 3%. So in 3 of the last 4 August series, Nifty had seen a big up move. Now, what will be the main key triggers as we start the new series, that is the August series? First, the commentary around tariffs, because market will keep reacting to, so we'll continue to focus what exactly Trump says. Second, RBI policies on August 7th, so NBFCs and financials will be in focus. Remaining Q1 results, market will keep tracking. And last, festive season starts, so all the consumer and auto companies will be in focus. Lastly, talking about the stocks, 10 stocks are out of F&O. Some of those are ACC, Balkrishna, Chambal Fertilizer, Aarti Industries, Birlasoft. But 2 stocks have entered F&O, and those 2 are Nuvama and Suzlon. So keep an eye on these stocks as well.
Very interesting list there. 10 stocks out of the futures and options space, and 2 new ones entering the F&O space. It's some flashes on your screen. White House officials have exclusively told CNBC-TV18 that these modified reciprocal tariffs that we spoke about will take effect from the 7th of August. And this should be taken not as an extension, but of course to prepare the Customs Department for the implementation of these tariffs. We take a short break. On the other side, cues from the commodities market. Stay tuned. Welcome back. Parikshit is back with us to tell us more on the flashes that we just addressed before going into the break with regards to the implementation of the reciprocal tariffs. Parikshit, tell us more.
Well, White House officials telling CNBC-TV18 exclusively that the reciprocal tariffs will take effect from August 7th. Now, this is something that CNBC-TV18 had pointed out that while the tariff announcement has been made for the 1st of August as the effective date for new reciprocal tariffs, the date of imposition and applicability is the 7th of August. And the White House is now telling us that this should not be read as an extension, but only to give Customs and Border Protection ample time to implement these tariffs. We also asked them, what is the current issue in India-US trade talks? What is the current irritant? So they told us that they would defer us to recent interviews and remarks by Secretary Besant, who has often gone on to say that India has been frustratingly slow in trade negotiations and it has been slow in coming up with concessions and opening up the market. They also defer us to remarks by POTUS, who has complained about how India has been buying Russian oil and defense equipment and how additional penalties could come for India because it is also a member of BRICS. A very important statement coming from Secretary Marco Rubio, who went on to say that India's purchase of Russian oil is funding the war against Ukraine, and it's definitely an irritant in talks, but not the only irritant. Finally, and a most important one, exemptions for current or potential future sectoral tariffs and other products remain in place. This means that there were exemptions announced in Executive Order 14257 on the 2nd of April by Donald Trump, and this had a list of exemptions for items such as pharmaceuticals, semiconductors, certain critical minerals, energy products. Those will continue to be exempted from reciprocal tariffs, and so will sectoral tariffs for places such as steel, aluminum, and autos.
Parikshit, thank you for that update. Take a short break. Commodities cues on the other side. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates on the commodity space. Manisha, good morning. What are you picking up today?
Harman, thank you for that. Well, I'm looking at copper prices first because this is one that we've continued to see further declines in. After that 18% of decline in the previous session, it's been 6% decline in the overnight markets again. And the Asian markets have seen yet another percentage point decline coming in. While the U.S. has excluded refined copper from tariff package, it really is about the weak economic data that the markets are dealing with right now as well. The China factory activity has shrunk in July to 49.5 versus 50.4 in June. That is what really seems to be bothering the markets. And of course, the premium going off with expectation that much of the copper that was flown to U.S. could be finding its way in LME yet again is what is keeping these markets very choppy. But it clearly is a scenario of profit taking in other commodities as well. The economic fallout of U.S. tariffs could impact global energy demand is what the street seems to be working with. And with Trump threatening 100% secondary tariffs on the buyers of Russian crude has led to the crude oil prices slipping from its 6-week highs. We also have seen a decline in gold. Silver is trading at a 1-month lows as well. And many of the other metals also declining as they watch every day's changing tariffs from U.S.
Manisha, thank you for that update. With that, we call time on this edition of Power Breakfast. Thank you so much for watching. Bazaar Morning Call sets you up for the final trading day of the week. On the other side, stay tuned.